The
Almost read the
broadcast is now
broadcast.
starting. All attendees are in
Oh,
listen-only mode.
hello everyone. Okay, so we have the broadcast started. This is getting recorded. Welcome. What happened to that? You know what stock I was looking at? OPK with, I think his name is Robert Frost. He's a crazy old man insider who keeps buying shares, and now it's finally working. Yeah, it was up 4%. Robert Frost, an insider. Interesting fella, I'm sure. Um, we get the question box. Cool. So we got that. Can we talk about Microsoft? Surely. We'll talk about Microsoft. Question box. Does he? Dr. Frost. He's a crazy old man from what I hear, and he's been buying, he's a CEO, he's been buying his company stock for ever. And he was buying it and it was going straight down every day, and now the stock has just made a huge comeback. Millions. Um, and he's actually look. I mean, he's a crazy old man. Look at this. And now he's crazy, but now look at him. 7/17, 7/5, all of June, all of May, almost every day in April and May and March, he would buy his company stock. He bought more at 560. He bought it at $3 and now it's $6. He bought it at 5, he bought it at 4, he bought it at 3, he bought it at 2, he bought it at 5. I think all he does is buy stock. Like, I don't even know what the company is, but all he does is buy his company stock. That's like his full-time job. So I just find it interesting. Now I saw him buying calls too today. I gotta figure out if I can periscope this. How would I do this? How can I actually get my phone to stay? Okay, perfect. I think I have it on Periscope. Yeah, he's an interesting character, from what I hear. So, um, hey, stock finally went up. He has a file. He has to file a plan with SEC and might be taking his profits after years. Yeah, who knows? Um, yeah, he's a medical doctor. I really have no idea. I would love to talk with him and be like, "What are you doing?" Just to kind of find out what is his day like? Oh, step in the office, look at the markets, buy shares. But Dr. Frost, we have work to do. No, 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 no. Someone do the work. I have to buy shares. He must be quite the character. All right, we'll start here in 2 minutes. Please, but Dr. Frost. No, no, no. I'm busy. I'm buying shares. We see him like he's the one behind, uh, there's some merger in biotech, and someone buys like 20,000 calls. We find out it was him. Ha ha, got ya. Like Dr. Frost. Make movies out of him. The corrupt traitor insider, yet doctor. I never thought it would be him. It's me, Dr. Frost. Who knows? Maybe I'm just making a crazy story up. I must say, he is an interesting character. And he is interesting. All right, let me find out here if I can set this up. Should be a good webinar. Okay, good. Hmm. Cool. All right, we have that. We have that. Okay, I think we're good. We have sound. Everything okay? Sound good? Audio good? Screen sharing good? This will be recorded. What do people prefer? The 7 p.m. or 8 p.m. Eastern webinars? What is the what's the preference? 7 p.m. or 8 p.m. Eastern? 7. We had it for 7 and then I couldn't make it. I thought it was at 8 originally. 7? Oh, 7? Okay. Wow. Overwhelming. 8, 8. Oh, we'll see. 8, 8, 8, 8. Okay, cool. Mountain time. All right, so let's get started here with the earnings webinar, because there's some good insiders in the markets. So that's always what I want to see. I want to trade off the insider. So I'm Lance Ippolito. You can email me or message me at twitter.com, Lance Ippolito. It's usually quicker. Risk disclaimer. Whoa. Day trading, short-term trading, option trading, and future trading are extremely risky undertakings. They generally are not appropriate for someone with little capital, little or no trading experience, or low tolerance for risk. Never execute a trade unless you can afford and prepare to lose your entire investment. All trades involve serious risk. You can lose your entire investment. No trades or recommendations or advice may not be sued lost capital. All trades are educational purposes only. Contact your broker or IRA for execution, market, and other capital requirements. Everyone watch the presentation. Here's to all disclaimers. Optionrecord.com, AlphaShark.com, and Lance Ippolito. So that is me. You know, I've had some fun. Citigroup Global Markets was kind of my first, actually, no, research was, but then Citigroup was kind of my first formal desk, um, you know, dress up every day for work and stay up overnight to call some of the overseas markets, which was not fun. Then I moved on more of the future side and then got more into the option side, which I actually prefer a lot better, especially for a small account. So I like to trade odd stocks. Etsy, VRX, which they changed their name. Weight Watchers used to be my favorite. Now, I don't know, it hasn't done much this year. WWE actually is one of my favorites from the year. And I'm missing my WWE wrestling on TV right now for the webinar. I actually got the app. I think it's like $10 a month. So if you do have questions in the webinar, put in the question box and say, Lance, answer my question. Or if you don't, you can always just email me or message me on Twitter for if you have a specific question. I had a couple people do that and had some nice conversations there. So I'll try to keep it under an hour and we'll save past 15 minutes for questions and or trivia. I have to think of some trivia questions because you know I love me some trivia. I trade real money. I win, I lose. Sometimes I do nothing. Sometimes there's nothing to do. And I don't know about everyone out there, but every time I go to YouTube right now to play some of my, just music in the background, I keep getting so-and-so bond picks for stocks. I am no Lance Bond Picks, and this is no Lance Bond Picks webinar. So if you know what I'm talking about, feel free to laugh. If not, put it this way: I don't trade the penny stocks out there at all. It's just I've been flooded with this stuff, and I'm like, what is this? I was an ex, you know, in New York, and here I am, and I trade penny stocks, and I'm up, $300,000, and I'm like, oh my goodness, this is crazy. It's almost as bad as what's the other guy, the Timothy Skike, that penny stock guy with the fake cars and house. Jeez, what a crazy world. Game plan. So, why trade earnings or catalyst events? If you don't trade earnings, feel free to stick around. It's not strictly earnings. You can do this with any name. Or if you're an investor, you're not even a trader. It's always good to see what the insiders or the big players are doing. But yeah, they're funny folks out there. But I just mind blowing of anyhow. How to side with probability? Because in trading, people ask me, Lance, why don't you trade IBM for earnings, or why didn't you trade J.P. Morgan or Goldman Sachs? I have nothing on my side on those trades. There's no probability. There's no advantage in a Goldman Sachs trading for earnings, and we'll go about that. Gain the advantage, not the market makers. So when I talk about stocks like an IBM or J.P. Morgan or Goldman Sachs coming out with earnings, who wins? Not me or you. If we buy options, the market makers usually win, because they're not going to let those big names move outside their expected move, unless you sell options like iron condors. We can talk about that, but I'm not that type of guy. Trading earnings with options and or stocks. If you don't trade options, you could always do a stock trade and just put a set stop in. My goal is for everyone out there not to go and put all their eggs in one basket and then be wrong and then say, no, I lost so much money. My goal out there is for everyone to risk the smallest amount of capital you're willing to lose and to potentially make the largest reward out there. So I want everyone, and myself, that's why I trade, to make the biggest bang for my buck out there. It's very rare I'm going to risk one to make one. It's like the poker pros out there. I may have pocket sevens, and you may have ace king or ace queen. So therefore, the probability is 50-50 that I'm going to win or you're going to win. It's a coin flip. But if I'm risking, let's say, $1 to potentially make $10, then of course I'm going to take that coin flip, because I have a 50-50 chance of winning 10 times my money. So that's what I want. If it was something like a 50-50 chance to win double my money, then there's no odds or probability on my side. Looking at names that report earnings within the next couple weeks. We can look at names like that. We could even look at a couple names that reported after the bell, like CSX or UAL or some of the airliners, or we could look at names upcoming, which a lot of names start to report next week. I think all your big FANG names, stuff like that. Yeah, Zuckerberg sold some shares, but again, even a name like Facebook, it's very hard to know exactly what's going on with the insiders. And then we'll talk about the earnings master course, earnings indicator, and trade alerts out there as well. So the first thing I get asked a lot, so I want to get this out the way, is, Lance, where do you find the earnings events? Well, TOS usually lists them on their platform, but Thinkorswim or Schwab or whatever platform you use, Fidelity, E-Trade, sometimes they're not always right. So you have to look for officially again, you have to look at the investor relations on the company's website to get the official report. But what I like to do is do this, and it takes 30 seconds, just because I always get this question. I like to go on a website called FinViz. I have no relation to them. If I have no relation, I never talked to anyone over here. Personally, I just use it. I like it. They even have a heat map. They have names that move a lot, like Riot today with the Bitcoin news. It's a pretty cool website, right? But what I like to do to find names that report earnings is this. I go to Screener. Screener lands. Joy. And then I go to Earnings Date. Where it clicks any, I like to do usually tomorrow before the open. And I can separate the name by volume. So like Morgan Stanley has the highest volume today, and it reports tomorrow before the open. USB, Abbott Labs, Eric, Texatron, and VS. This is where I like to get my earnings list. Northern Trust, Granger. Or what you can do is click next 5 days. We see GE, Microsoft, Johnson & Johnson already reported, so instead of that one. OMC, they actually already reported. Cliff reports. eBay reports. RF reports. Goldman, they already reported. CSX reported today. But we get a picture. I could even do next week. So like next week, AMD reports, Ford reports, Twitter, Comcast, Freeport, Valet, Facebook. So I get a picture, Starbucks, of what names report. So it's simple, it's free, it's easy to use. Screener, earnings date, pick your date, and then you could separate by volume. You could even go to option or shortable or option and shortable. And it gives you a lot of criteria. You could do sector, you could do market cap, you could do IVO date, you could do industry, country. So a lot of factors, completely free. It is called FINVIZ, FinViz. Good? We have it. That's what I use. Some people have their own. I personally use it, and I like it, so that's what I use. Later in the presentation, we'll look at some stocks reporting next week and look how to trade them. But going back to the question, what names to trade? So we looked at a few names on the list that reported earnings upcoming. We saw your Microsoft, your Facebook. We saw names that already reported, like Goldman Sachs, JP Morgan, stuff like that. But how do I know what names I want to trade? Well, besides looking at, experience on names, what to trade, a couple of things I like to look at. Off the top of my head, you could always look back at the chart history. I want to fully disclose that and say, hey, if a name reports earnings, I want to see if it's a gapper. What I mean by gapper is this. Let's go to, let's go to JP Morgan for the example. JP Morgan, when it reports earnings, I know I'm not going to trade it because it does not move. What do I mean by it does not move? Last quarter, the stock went from 113 all the way down to 110. A $3 move, less than 3%. That's not going to ramble my feathers. Right here, JP Morgan comes out, the stock goes down $1. Whoop-de-doo. Not going to, now it had a nice move yesterday, but again, a small move right here. Stock did not move hardly, $1 or $2. Not going to interest me. Right here in JP Morgan, stock did not move. Therefore, if a name doesn't move, like Morgan Stanley comes out tomorrow, I have no trade in it. I have no desire to trade it because if I look at the previous history, it does not move. It does not. This is even a light move, small move, small move. Names I want to trade are odd names. What I mean by odd names, different names. Names that aren't very, 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 very popular, or names that don't trade, 50,000 option contracts a day. So that would be, I messed my phone up. That would be like a lot of retail names, like a name like Lululemon. Why do I like a name like Lululemon? Last quarter, gapped up big, $20. This quarter, gapped up big from $80 to 88, 10% move. This quarter gapped up big. This quarter gapped up big. I want to look at names that can move. So I want big movers. Now everyone's asking me, Lance, what about Microsoft? Oh, Microsoft. Ooh. It's a big tech name. Satya Nadella. Yay. Right now, I'm not super thrilled with it. Of course, this can change overnight or tomorrow. But a name like Microsoft, even last quarter, it had a very light move. 94 to 95, got all the way to 97. It's only a 3% move. That's not a huge move for a name like Microsoft, especially with the options that are going to be very pricey. Microsoft here, nothing. Microsoft here, back in October, yes, big move. That's what I want. So if I trade Microsoft, I want to see, an $80 to $85 move. That's a big move. I want something big that reports earnings. So a lot of names out there that are very popular that trade 10, 20, 30, 40, 50 plus thousand options a day, they're going to be difficult to trade directionally. So when I talk about names like JP Morgan, IBM, Johnson & Johnson, Goldman Sachs, even NVIDIA nowadays, the spark is over with NVIDIA because it trades so much. I'm not going to really look at these names for earnings or like a Wells Fargo because I know, JP Morgan is not going to come out with earnings and the stock's going to be up or down 8%. Just not going to happen. If it's up or down 1 or 2%, that's going to be very normal. There's no insider in Goldman or IBM, and the market makers sell options to retail people like you and me who buy options in these common names. We buy options, we say, oh yeah, JP Morgan's going to have a big move. The banks are great. No, we get caught, and here we are left with the premium burn. Therefore, as a trader, I want to make large returns, and in these stocks, I have no advantage. Now, if I want to sell, like an iron condor or some kind of like calendar spread or something, of course, these names provide good liquid options to do that. But personally, myself, again, I want to try to get the biggest bang for my buck. Now, when I had my big account, sure, I'd go in there and sell bull put credit spreads or iron condors and stuff. But with my little account right now, it's going to cost, I know, more in commissions to put all these spreads on. And then B, I'm not going to risk 2, or I'm not going to risk 4 to make 1 or risk 4 to make 2. I want to risk, 1 to make 4. So it's all about risk versus reward. What is my goal? So my goal is to screw the market makers. I want them to sell me cheap options and then that I buy, and then I want to go ahead after the report and sell it back to them or sell it to the public at a much higher price than what I bought it for. So I rarely sell premium. I like outright calls and puts. Of course, you could do let's say I do a call, you could do a call spread. Let's say I buy a put thinking the stock goes down. You could spread it out, do a bear put spread, stuff like that. But for me, and I have a cash account, I can't do spreads right now in it. So I've been doing more of the outright call and put. So how do I find the market maker's expected move? Well, TOS has it very, very simple laid out for me. So let's go to it. And this is why I like Thinkorswim. So we had UAL come out with earnings. And the market maker's expected move. This is our gauge of earnings. And this is how we know if we're going to make money or lose money, even if we're right on direction. So if we look on an option chain, and pretty much every platform should have this. If we look at these 3 M's, M, market makers move. It gives me for UAL with the stock at 75.62. It says the expected move is going to be $3.38. So therefore, I add this together. If I want my upside price, which will be 79 bucks. And for my downside price, I take away 75.62 minus, so I just minus 338. And what do I get? 5, 1, 2, 4, 2, 2. So I get 72.24. So therefore, if I'm an option buyer, or I think UAL goes up, I need to see what are the 79 calls. The 79 calls are 20 cents. And if I'm an option, if I think it goes lower and I want to buy puts, I need to look, I'll round it up to 72.5. The 72.5 puts, we're going for 183. Is that right? The stock was at 72. Oh, yeah. Stock already reported. So wait. Oh, you know what? That's the current price of the stock. Hold on. It's 72. Whoops. I did the move after hours, not the move. Basically, you'll take the stock price. UAL already reported, pardon me. You'll take the stock price plus or minus the market maker's move. So for this example, it would actually be 73. It will actually be 76. And for the downside move, it would be about 63 minus 72, about 68-ish, right? Pardon me, about 69-ish for the downside. So therefore, if I'm buying an outright call, and I'm bullish, I need UAL to be above 76.68, the price of the call, and the strike I buy if I want to make money. And if I'm bearish, I need it to be below about, 69 and change. Sorry, that got a little confusing there. I forgot UAL already reported. Or what you can do is just look at this right here. The 64% is the IV for July expiration, and 370 is the implied move for the week. So between now and Friday, or pardon me, before the close on Friday, UAL was expecting a $3.70 move. To make it a little bit easier, because Microsoft is reporting this week, I keep dropping the phone. Microsoft is reporting this week. The expected move for Microsoft would be about $3.33, and the implied move for the week is about 372. So therefore, I would take 106, the current price, plus 330, so that'd be about 109.30 is the upside target for Microsoft. Now, Phil asked a very good question. He says, Lance, why wouldn't you buy in higher delta in the money call if you thought the stock was going up? We'll talk about this more in the master course for certain, but for the quick answer is this. Let's say, Phil, I am bullish on Microsoft. I think it's going to go up, right? So with the stock at 106, we'll round up. The 106 calls are 189, okay? So we'll actually say 185. So we'll do a mid-market. We'll say if I want to buy the 106 call on Microsoft, I'm going to pay 185, okay? Now let's say Microsoft goes up to, we'll say 109. So right to the expected move. Okay, so we're risking $1.85. If Microsoft after earnings comes out and the stock goes to 109, that call that we paid 185 is in the money with the stock at 109. So that call is going to be $3 plus. So therefore, I take 185 and I turn that into $3, which is a good gain, right? I pay 185. I make $1.15 on the option. I sell it at $3. That's a pretty good return on the investment. Now, let's say Microsoft went to 109 and I bought the 109 calls for 69 cents. These calls may be flat. They might not even move, right? Because the stock's at 109, I paid 69 cents for the 109 call, so I really need the stock to be above 109.69 for these calls to make money. So in that instant, buying the in the money call, the 106 call, would give me a profit, 185 to $3, which is great. And if I bought the 109 call, I might be down, or I might be flat on the position that I paid 69 cents for. Especially if Microsoft, let's say it goes to 108.80, the 109 calls may not even go up in value. Or if it goes to 109, the 109 calls may not even go up in value, especially if it's like a Friday, because I think they report Thursday. So in that instance, buying the higher delta of the 106 calls would give me a profit. Now, let's say Microsoft goes to 112 on earnings, okay? So now, if I bought the 106 calls, again, so now Microsoft reports, it goes to 112. The 106 calls I bought for 185, they go to $6. Big gain. I pay 185, they go to $6. But let's say I bought the 109 calls for 69 cents. Now it's at 112. These calls go from 69 cents to $3. So I get a better return. I can't do the percentage gain in my head. I get a better return. So what would that be? Let's say 70 cents, 400% is 280. So I'm looking over 400% return on the 109 calls. These calls here, I get what? 300% would be what? I would probably get about a 185 to $6 would be what? It won't be 400%, would it? I think it would be around 300% return. My math may be off. So I'm getting a bigger bang for my buck by buying an out the money option if I think Microsoft exceeds. So if it exceeds the market maker's move. Now with your big stocks like Microsoft, that is harder to do. So it's 320% return. Thank you, Chris. And what am I looking at from 69 to $3? Over 400%, I take it. I can't do percentage math in my head. So I'm getting a bigger bang for my buck on the out the money call than I would be the in the money call. For the big stocks like a Microsoft and your IBM, Goldman Sachs, stuff like that, it's harder for them to exceed the market maker's move. But when I start trading these, let's say, lesser known stocks or like a Lulu, I could potentially pay 20 cents and sell it for, let's say $1. So that would be a 500% return. Rather, if I bought like an in the money call, I may be getting, a double, 200 or 300% return. Also, too, a very good question or statement, I should say. I'm risking less. Let's say Microsoft went down, right? Let's say Microsoft after earnings went to 100. So it went lower. If I bought the 106 call, I lose $1.89 or $189 per contract. If I bought the 109 call, I only lose 69 cents, right? Instead of 189. So I have to risk more with the 106 call than I do the 109 call. But yes, probability is higher of my trade winning from the 106 call. My goal is to find that probability edge through work, through insider activity, or for doing research, rather than buying the high delta, more expensive call. But very good questions, especially if you looked at a name like Netflix. The at the money calls were over like $20, right? That's a big, a lot of premium you're paying for at the end of the day a binary event. So let's get started, but very good questions. So if you say, Lance, what is my opinion on Microsoft Target? No idea. I mean, the call flow is leaning bullish. So right now I'm siding with a higher move. but all this can change in an instant. So we could do some research on it, but Microsoft, it's not one of my favorite names to pick. It's just too big. It's too big of a stock. Like if I look today at Microsoft, and then we'll move on. And let's say someone bought, like the Nigerians pumped it up today. Someone bought all these calls. It traded almost 300,000 options a day. So yes, a 10,000 lot's not going to stick out. A 5,000 lot's not going to stick out. But it trades tons of calls and puts. And I could probably go to a lot of these calls. And probably a lot of these calls, even though some say bought, there's probably a lot of puts bought too. And there's probably a lot, there was a lot of calls sold. August 110 calls sold. There was puts sold. There's puts bought. There's calls bought. So nothing really sticks out, and Microsoft is such a widely held stock, these are all spreads. So it's very hard for me to say, oh, someone knows in Microsoft there's an insider. It's very rare for these big companies where people are making millions of dollars working there that someone has, someone wants to risk their whole job or their $1 million a year salary to, go make $300,000 or $400,000 on an insider trade. It's not worth it. So in your big companies like that, the people are already taken care of. They don't have to do stuff like that. Now, let's say you're an executive for Harley Davidson, or let's say American Eagle, and you say, oh, maybe our sales are really good this month and for this quarter, then maybe you have a little bit more incentive to do something suspicious. But for a name like Microsoft, it's very, very hard, right? It's very unlikely it's going to happen. So what we can do, and what I like to do, is use websites, and these are, again, completely free, to where, like insidercow.com and openinsider.com, to where I can actually see, hey, is the CEO buying shares of stock, or is management selling shares of stock? What can give me a clue of what they're doing? So like CSX, they reported today. One thing that caught my attention is this. When I look at the insider filings, if I'm trading the earnings that capture the last quarter, so the quarter, I want to see something within the past quarter. So the past 3 months. Everything else, I could care less. So what I do is I'll go to Insider Cow. I'll do it one more time. I'll type in the ticker symbol. Again, I like Insider Cow. I'm used to it. I'm picky. And I like to see, what's the date? What's the date of the filing? Because if it's from last year, I could care less. Oh, look, May 2nd. So I have 5/2, or May 2nd. That's recent. I like to see, who is it? It's the CEO. Who knows a company better than the CEO? His name's James Foote. Nice name. So now what I can do is actually click on the document. Now this has to be filed with SEC, so it's all public information. I get James, I get where he lives or wherever address he put. I don't want to go to his house and say, James, what's the stock gonna do? Will it go up? Make a trade. I like to see when the transaction was, May 2nd, so within the quarter. It gives me, again, the Form 4 through the SEC filing. It gives me the amount of shares, 5,000, A for acquired or bought, D for disposed, meaning James sold shares. And then the price at $59.91, James bought 5,000 shares. Very bullish. Usually you don't see a lot of CEOs buy company stock anymore because the stock's so high. But this quarter, James did. James bought shares. He was the only one. He bought shares at 59. The other reports were from July of 2017, which I could care less about. So therefore, when I look at CSX, the chart, I say, James, the company CEO, bought shares in May. So he bought it right. He actually bought shares right here. Goodbye. Right in here. He bought shares right here. Who knows the company better than the CEO? No one. And what happened to the stock? He buys shares, stock rips higher. Common pullback with the overall market. Earnings comes out, and the stock's at $66.50, so almost at the high. So therefore, I can look at that and say, hey, the CEO bought company shares. The chart's nice bullish. I'm going to lean that the stock's going to go up because it's very rare a company or a management or an officer is going to buy company shares unless it's GE, which is, kind of a different story. And the stock is going to go straight down, right? I don't think the CEO is going to let his company fail after he buys stock unless he's, like a GE or an Elon Musk with Tesla. The same with UAL. UAL reported earnings, stock's up about $3. If I look at the cow, I call it the cow, insider cow, and I go to home and I type in UAL, I see this is from 6/8, so June 8, pardon me. Shapiro Edward, a director, what was he doing? He was buying shares at $69. Oh, well, stock granted, he's granted or awarded. I consider it almost the same thing. If I'm given stock, or let's say I'm a new CEO and the company gives me stock or something like that, I tend to think, especially with WWE, when they sign someone or like a new executive, they give them stock. And it's almost like once that happens, they're not going to let someone's stock go down. It's very rare. So like with UAL, they bought stock at $69, a decent, 10,000, 15,000 shares, pretty good buying here. And we see the company after hours get bid about $3 to $75, so about $6 gain. And we could look too, each year some people get stock. A lot of times, especially in biotechs, a lot of their pay or salary or compensation is stock. So that's why you'll see sometimes in biotechs people sell stock. It's like, almost they want to get that, that salary. We also have to look at it for tax reasons. Sometimes people may sell stock because tax reasons. But usually, and again, this is for companies that are, not like a big, like Goldman Sachs or JP Morgan or IBM. We're looking at companies that are, different, smaller, that can move more, higher beta. Like with Under Armour, for example. Under Armour signed Dwayne Johnson, The Rock, to a deal, right? Remember that? And you have to think about this from the person getting compensated point of view. I want you to think not so much as a oh, look at the chart. I want you to think of it as an insider, like you run the company. So The Rock, or Dwayne Johnson, the highest paid actor in the world, so he likes money, signed to Under Armour in February, okay, of 2017. So let's go to a weekly chart. February of 2017 would be, can't see that here, right about here or so. They probably gave him a year after his signing. They probably gave him stock options. So that would be right here. It should be right around here. And what happened to the stock ever since? It's gone straight up nearly. It's gone from about $13 to $21. The same thing happened with Oprah and Weight Watchers. We all know this story. Oprah comes with Weight Watchers. The stock goes from, a teenager to $100. They actually did that with that DJ Khaled, I think his name is, or Khalid. I forgot, whatever, however you say his name. He got signed to deal with Weight Watchers too over the past year. Stock next day was up 15% and it went straight up. So they're not going to let the companies fail, in other words, if they're granting people shares or buying stock. Got it? Yes, the open market purchase, P. Safe to say these guys bought options. Not always, Sean. Not always. Someone, they could be granted options as reward, but usually when I see that, I usually tend to think it's someone within the company who knows about it or something like that, doing the options for a bigger bang for their buck, right? So if I'm the law firm putting together the contract, because you have to figure a lot of these funds get business from law firms and stuff. Or if I'm doing the accounting, I say, oh, we're going to award Oprah X amount of shares. Oh wow, that's a big news. Hey, I'm going to go in the options market, spend $40,000-$50,000 of premium buying calls because I know the stock's going to go up a large amount in the next coming weeks on the news. So you have to look at it from someone in that point of view. Same thing. Open Insider, Insider Cal. They're just two different websites. In case one doesn't work for you. They're just, you could pick either one, use them both. I use Insider Cal. Someone told me Open Insider. The site looks okay to me. We'll look at that because we could do that strictly. Well, actually, we'll look at that right now. Good questions, though. Looking at option flow, aka this is my favorite part of trading, especially earnings, besides the insiders from the forums, is putting the pieces to the puzzle together. So when we kind of figure out, hey, I'm going to trade an earnings event, obviously I'm going to try to make the most amount of money with the smallest amount of risk. I have to put the pieces to the puzzle together. What makes sense? And I have to look at all surrounding factors of it, right? If all the banks are getting whacked, I'm not going to go and buy Goldman Sachs call options and think it's going to stick out and shoot up 10%. It'd just be dumb trading. Or if all the industrials are getting whacked because of tax reasons, and company XYZ reports and has their headquarters like every other industrial, chances are it's going to get whacked too. So I have to put the pieces of the puzzle together. Now you may have saw the other week the Nigerian ponytail Yippee brothers. I can't, I could call them that because I have a ponytail, and I moved to Costa Rica for a few months and did all that Yippee stuff. They were saying the other day on the halftime report when they do their little pump, say, oh, we see call options in Wells Fargo. Like today they did Microsoft. Hopefully Microsoft goes up on earnings to save their behind. But they're saying, oh, we see heavy call buying in Wells Fargo ahead of earnings. I bought these calls and I plan to stick on them for 2 to 3 weeks. However they do their spiel. So what happened to Wells Fargo on earnings? It got whacked. It was down like 3%, and the calls went to near zero, right? Because they bought calls, stock went down. But you have to figure Wells Fargo trades 40 to 50, 60,000 options a day. So a 4,000 lot or 4,000 order is not going to be an insider. There's nothing fishy about that. I want to find a stock that the options stick out. Why are they doing it? Why are they, especially the day or week of the event, thinking, why would someone buy a large amount of calls or puts ahead of the earnings report? Do they know something? Could it be a hedge? Could they be long the stock? Do they do this every quarter? Is there a history of an insider in the company? These can be found, again, in smaller companies. So let me show an example. So we go to Wells Fargo, and again, we could do this. Again, public information. You don't need trade alert or anything special. Wells Fargo today traded 42,000 calls, 23,000 puts. Now we have to remember that 90% of options are sold. So these people are usually selling options, right? They're not buying them, they're selling them. So selling options really does nothing for me. And you can see a lot of these are spreads. So what you can do is go to option time and sales. If you click on quantity 2 or 3 times, get it to the highest amount of quantity. And you can see, hey, someone bought 5,000 January 67.5 calls at 33 cents. Okay. Here's some January 62.5 calls at mid-market. They also sold a lot of puts, but again, they're selling puts that are 4 cents. It's not a large amount of premium. They also bought puts. They bought 3,000 puts in July, the July 56 puts. They bought August 3rd, 55 puts, 3,000 times. So none of this is giving me a good sense of direction. Big call buys, there's big put buys, there's spreads. I don't know exactly what they're trying to do here in Wells Fargo. So I wouldn't say if someone came in and bought 3,000 Wells Fargo calls that they know the stock's going to go straight up. No, It's just the probability of them knowing that, and of that happening is very low in a name like Wells Fargo. Now, on the other hand, a name like Weight Watchers had a history of a player coming in before every earnings quarter, the day of or the week of, and buying a large amount of call options. And for all of 2017, every time that Weight Watchers reported, the stock would just shoot up to the moon. It would just literally shoot up. But over the past couple quarters this year, the player is gone, and he's nowhere or she's nowhere to be found. And it breaks my heart every earnings. And what has happened? Weight Watchers will report, the stock will do nothing. Weight Watchers reported, the stock did nothing. Weight Watchers reported even here, and the stock actually only went up like 10%, which wasn't a big move. The following day, it did nothing. So now that the insider's gone, I'm probably not going to ever play Weight Watchers again for earnings because they're gone. And how do I know? Or how do I know the options are unusual or they stick out? Well, again, I go to my time and sales. Weight Watchers today only traded 2,300 options. It's very minimal. And we see here from quantity, these are not insiders or institutions. These are retail traders. 50 lots, 40 lots, 30 lots, 20 lots. These aren't players that can move the market, so to speak. The same thing used to happen with my favorite company ever, Match.com. You see here, it does not trade a lot of options during the day. It traded only 1,300 today. But Match.com used to have a trader who would come in ahead of their earnings. This was, again, about a year or two ago. And they would buy calls and the stock would rip on earnings. But now that player's gone too, which makes me very sad. So I know Lululemon's a prime example. There would always be a call buyer around the week of earnings in Lulu, and it would go up. And Lulu, again, it's a company that probably trades today, I would say maybe 2,000 or 3,000 options a day. Actually, it traded 14,000. That's actually a lot. But most days, probably the average, I would say, is probably around 2,000 to 3,000. Yeah, Lulu, no one thinks about it, but I mean, the stock's just gone parabolic. So I want to look at names that are a little bit different than what are highly, mentioned, let's say, like on, CNBC or so. I want to look at different names. So, like, Red Hat was a name that stood out. Red Hat hardly trades any options per day. What are we looking at in Red Hat? We'll just do an example. So you can look at this every day, or especially if the name reports earnings. You don't need a fancy scanner. You can actually look and say, hey, what are the highest, buys and sells that stick out? So Red Hat today had a 2,000 lot as a buy right sold of puts. Buy rights we don't look at. Buy rights are tied one-on-one stock. I want to see an opening position or a new position where volume is greater than open interest, and we'll go about that more in the master course. But, Red Hat, it trades again, mostly retail traders, 50 lots, 30 lots, nothing sticks out. So when Red Hat had earnings recently, someone came in literally 30 minutes before the close and bought the weekly 160 puts for $2 with the stock at 165.75. So the stock was right here. They bought puts about 45 minutes before the close. Earnings came out. The implied move was $6. The stock went from about 167 all the way down to about 143. So a huge move lower. They covered those puts the next day, or they sold them for $17.82, 850 of them. So that was a huge order for Red Hat. They bought weekly puts right ahead of the earnings event. It was a sweep opening new trade. Stock got crushed. They sold their puts. The next day, they turned $2 into $17.82. That's crazy. I bought the 157.5 puts, and they were $1.35, and they went to 15.60 overnight. I think I sold them at 14.30, still over 1,000% return. But this is the kind of trades that earnings can do. Off 135 bucks a risk, and that's a one lot, a trader could have made 1,560 bucks, over 1,500 bucks. It's crazy. That's a crazy return on your trade for a quick move. Hey Lance, is the trade scanner you just showed us? This scanner here is through a company called Trade Alert, and what I do is customize it. So I think you could get the scanner. It's like $300 a month, but then you have to customize it however you want, which can be a little bit. And I'm not sure they sell to retail anymore. I think it's just institutions and funds, if I'm not mistaken. But that's a company called Trade Alert. I get it from Alpha Shark, but it's very advanced. You really have to program it where you can read it because it's so advanced. But reading order flow, figuring out the puzzle. This gives me insight. And again, you don't need the scanner. You can look at stuff just through option time and sales, because every option is a time-stamped order. Everything's visible. Everything's visible. So what you can do is say, hey, I see heavy call buying in the financials ahead of, let's say, a Fed event or an earnings event, or they just had their little results coming out. And maybe it will give you an advantage. But again, financials we don't love. Financials is very hard to tell. So what you can do is this. You can look at other names in that sector that will move. So like last week, Lanier and KBH reported. Well, DHI and Toll Brothers, other home building stocks, had very heavy call activity. And then Lanier and KBH beat earnings. So what happened to DHI and TOL? They went higher, and they didn't have all the juicy premium. Their option premium wasn't as high as the earnings names. Because remember, earnings, option premiums elevated because of the uncertainty of the event. And again, this is something we have to take in consideration when we trade earnings. So one name that stuck out, and again, this is not always right, but it can help us put pieces to the puzzle together, is like Nike. The day of Nike earnings that were after the close was very odd. Very, very odd. Very fishy. Very suspect. Because names like DKS, Dick's Sporting Goods, had weekly call buyers. If I go to the Dick's option chain, I would be shocked if it even had 100 options for this week. Why should it have like 3,000? Yeah, 500, 200, 200, 181. Very small DKS call buys for the week. Or if I go to Under Armour, I haven't looked at Under Armour for this week in a while. But look, Under Armour, 53, 123, 217, put side 121, 82, 339. Very minimal option flow. And this is monthly expiration, and which should be higher. What was weird was this. Traders were coming in very large and buying Dick's weekly 36.5 calls, over 1,300 of them. Under Armour, trader paid above the ask and bought some July calls. And then for Nike, which reported that day, they were buying Nike calls. Now, why would these traders buy Dick's Sporting Goods and Under Armour calls with Nike reporting? Because Dick's, well, they sell Nike shoes, Under Armour's in the nearly exact same space, sportswear, clothing, very similar to Nike. So if Nike went up, they were playing Dick's and Under Armour to go up as well, which they were right. So when I saw these players come in, I said, man, why are they buying Dick's? Why are they buying Under Armour calls? This is, it's kind of painting a picture. It's painting a story that, Nike is probably going to go up on earnings. Again, do they know for sure? No, but I'm going to side with probability with them. So what happened with Nike's? Nike earnings came out, and the stock ripped a lot higher. The 76 calls that were 50 cents went up to actually $6 at one point. Good old Lance sold them at 480 like a donk, but was very happy with it. But still, again, a $50 turns into $500. Actually turned into $600 per one contract. You really can't beat that 10 times return on your money. They actually here you see them at 11.5%. So earnings offer a very, very large return on investment or return on a potentially small amount of risk. So what we have going on at Alpha Shark is this. I think we're going to do the course and start everything. I want to lean on next week or the following week. I think next week, because all the big names start to report next week, is we have an earnings master course that will be 2 hours minimum. And this will be a full overview of trading earnings. I'm talking very, very in detail, from names that I've traded with past insiders that I have knowledge of, that I feel very confident in, to figuring out, hey, is option premium too high to trade it? Or should we be selling options on it or playing common stock instead? How can we get the most bang for our buck, selecting a strike price when we're trading options as well? Looking at these forms, putting the pieces to the puzzle together. This will include not only the course, because my goal is to have everyone out there, once they're done with it, be able to trade earnings on their own and not, need me. It should be more of a, hey, Lance, what are your thoughts on this? This is what I see. What do you see? Instead of, hey, Lance, where do you think, Microsoft's going to go on earnings? Then it's more of, well, it's a coin flip. We don't want those questions. We want, again, more confidence, more probability. This comes with 1 month of trade alerts as well for free. After that, the trade alerts renew at $9.99, I believe. If after 1 month of trades they're not profitable, you will get 2 months free. That's how confident I am. Yes, and good question, Jose or Mr. Murray. If you don't trade the options, or you don't want to trade the options, you can look at trading the common. Or if you do trade the options and you don't want to buy an outright call and put, maybe you want to reduce your risk, you can always do a call spread or a put spread, or just buy a common with a set stop on that too. Because everything is risking the smallest amount for the biggest amount of gain. That's the key. That's key. We want to risk 1 to make 3 or to make 4. We don't want to risk 1 to make 1. So that's what we're going to really get into. Because I want to have a couple, I've had RHT, I've had Nike that were over 1,000%. I want to get a couple 1,000%ers in my life. Well, WWE too, but WWE is more of a deal news. Also too, the brand new earnings indicator that will be released not in 2 to 3 weeks, probably not even 2 weeks. Brian, the programmer, is working on it. He's just been sick recently. The earnings indicator will take the market maker's expected move, give us the chart of where the move should go and how to, if we do play it, where will price go if it exceeds the move, and also looking at the indicator taking in option and the open interest level around the strikes. Because I want to make sure if they bought calls, for example, they're not closing them out. I want to make sure they're holding their position open interest through the earnings event, giving that more confidence. Once the earnings indicator released, that will be sold for $2.99 like all the other indicators on webinars. So for this special, it's $2.49. You get the 2-hour course. You get the 1 month free of trade alerts. If you're not profitable within the 1 month, then you will get 2 months free. That's how confident I am. And you get the earnings indicator, which will be very, very, very advanced and I think very cool for everyone to look at, all for $2.49, which I feel is very, very cheap. Usually the indicators itself are $2.99 and the courses are about $100 to $200. So I think this is a really good deal, and trade alerts come with it too. So I think it's very, very cheap, a very big bang for your buck, and you'll never have to worry about trading earnings again. You'll understand from step 1 to the final step on how to trade earnings. Kind of all the experience I take, everything I look at, I want to get that into your head. The earnings indicator is going to show something similar. I'll give a little preview. Very good question. It's going to be, it's one of the first indicators, or one of the only indicators I know that will actually send. By the way, the link there I just posted in the chat. It's alphashark.com/earningshark. It will be one of the only indicators, because we have Brian's such a really good programmer who can create scans out there, that will actually show the option volume and open interest on the chart, or as I should say, included in the indicator. So it'll be kind of like this. This is just the very, very minimal basic of it. But and then we'll have the advanced features coming out, which will be way more eye-appealing than this. This is just kind of a basic setting of it. So like Microsoft comes out, we looked at the expected move of Microsoft. That was about $3.32. So we'll just say $3.30 to round it up. And what it will do is this. So it gives the market makers implied range. So let's say Microsoft at 106 here, or with 105.95. So if we're bullish, the market makers are expecting the high to be 109.28. If we're bearish, the market makers are expecting 102.69 here. But so what that will do, it will take in consideration the earnings day. It will give us a prior history of the prior quarters for earnings. I'm not going to do the 10-day before and after period because I want to single out the earnings event. And then it will also take into consideration probably some technicals on it, and then also the options of where we think it can go via the open interest and the recent call and put options, which I think will be really good for pin plays too. You know, if you want like a stock to pin somewhere. So for example is this. We had Netflix here, and Netflix, I wish it would have showed it. I wish I could have had it during the market hours. We had Netflix go lower and then actually close. Even though the stock was down 21 bucks, it actually closed within the market makers' expected move because the market makers were implying a little bit less than 40 bucks on the move on earnings, and Netflix only moved down 21 bucks. I wish I could have showed it to you during market hours though. Can we connect? Can we get we can get a 5G and we all be connected? It's getting very close, isn't it? I will say that. I mean, and also too, for the trade alerts, it's not like one of these services to where I put on a trade and then you get it like 5 or 10 minutes later. It will be instant. I try to do them within 10 to 20 seconds at the latest for alerts as well out there. So it's not like, hey, you're far behind, or oh, I can't get in. Like I know some of the places out there, they're like, oh, you know, I tried, but I couldn't get filled because it already moved. No, this is, you know, pretty quick, and also too, all the names will be pretty liquid, so there won't be a huge discrepancy on orders. So that's the earnings master course with trade alerts. It will be, I want to say next week or the following week, but I'm leaning towards next week because that's when all the big names report. So yeah, you get the trade alerts included in the 249 with the earnings indicator with the course. All you do after 30 days, if you don't want alerts anymore, you just cancel. So it's just you just go to your, I think, subscriptions on it, and you just cancel it. It's very simple. Also, too, if you want a reminder, say, hey, Lance, when you buy it, I want to cancel trade alerts. We can put a note out there, too. The trade alerts are $9.99 a month itself. They're included in the 249 for the first month. If you want them after, then it's $9.99, so 99 bucks. So I think we're good there. Let's get into questions and some trivia. So any questions from the presentation or on earnings, feel free to ask in the chat. If they're very, let's say they're long or something that will require too much detail, you could always email me or message me on Twitter. That's fine too. If it's something, you know, super complex, like, hey, Lance, why would I trade a call? Or when should I trade a common stock versus a call option or a call spread? We'll save that for the master course. Yeah, so we want to see when we look at volume versus open interest, we want to make sure the position is a new position. So what that means is when I look at an option chain, and we'll do this for an example, like Microsoft. In July, we see how there's tons of open interest here. right? When we look at names, we want to see something that sticks out to where volume exceeds open interest in an order. So, for example, like this. So so even, and this is a smaller stock OPK, but today a trader was buying the 6.5 calls for July, and we see it was a new position because volume was greater than the existing open interest. And how we can look at that is we could go to our time and sales, and we see where's our July? July 6.5 calls were being bought up here. These were in smaller lots, and also too in the scanner. We go to a name like OPK. We see, hey, it traded 2 times 2 usual volume, and we see some 600 lot of July 6.5 calls opening. So it actually lets me know July 6.5 calls opening. It actually lets me know they're in opening position, but I always like to go to the option chain to make sure that, hey, volume exceeds open interest, because volume is today. Open interest could be from 2 months back. They could have that much in open interest, right? So we want new trades. We want to go as soon as the fund or insider puts on the trade. My goal is to go as quick as possible and copy them. I want to just run over right when they do it and copy them. That's my goal. I want to be right there along with the insider. So we want opening trades. We want volume to exceed open interest. If it doesn't, if volume is less than open interest, they could be closing out the position. We don't know what they're doing. So we have to check the following day if volume is less than open interest to see if they added to open interest or see if they subtracted from open interest. Now let's get into, if we're good on questions, feel free to ask some more. Let's get into a trivia question right now. Speaking of Microsoft for a free course, not this one, but one of the existing courses on the AlphaShark website. Speaking of Microsoft, who is the CEO of Microsoft? Satya Nadella. I'll give it to Eric Fraser and Eric Fraser with Nadella. Is it Satya Nadella? So good job there. So is the course ready to be purchased? The course will be live. I'll do the course on I think we'll do it next week. I'll do it live. So it'll be a live interactive course with everyone. All the questions will be answered, and then it'll be recorded so you could go back and get a copy of it to replay it. So yeah, the course is actually live, and that's why I want to wait till next week when all the big names report to do it. So the course is actually live. Real time, live, and then it will be recorded and sent out the next day so you can rewatch it or have it in your library. Yeah, but the course will be live. It's not like, hey, here's the course, buy it. No, it's actually live, current questions answered there. So email me, Eric Fraser, Lance at AlphaShark, and let me know you won trivia. Next question for trivia is this. No, it will be sent out as a text on the phone. You don't have to be in the trading room. No. That's part of the reason why we're doing it, because for earnings, you don't want to be sitting all day on your computer. You just want to go and put in the trade, and that's it. So alerts will be sent to you via text message. Not sure about email. I would probably, safe to say email, but I know for sure text message. But yeah, so that's the way for the trade alert. So you don't have to sit in the room all day. For the next question, dun 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 dun. Which CEO of a video game? Oh, we'll use this. Which CEO's CEO of a popular video game stock was on an episode of Shark Tank? His sons were on a popular TV show on CNBC. We'll do the TV show. What is the name of the popular TV show on CNBC that the CEO of a gaming company, his sons were on, wanting to raise capital? Shortly after the CEO of the Shark Tank, yes. Shortly after the CEO stepped down from GameStop. Chuck, shoot me an email, Lance at Alpha Shark, and we'll get you a free course. Actually, speaking of video games, what popular video game company makes the Madden series that will be released shortly soon? What ticker symbol or what video game company makes the Madden football series? Yeah, EA. Good job, Val. Val, shoot me an email. You'll get a free course too. That was a good one. The video game stocks have been very hot too, by the way. EA, Activision, and Take-Two Interactive. Very, very popular there, those names. Okay, so are we good? Any more questions? I know I went over on time and I'm horrible about that, but if you do have questions, shoot me an email. If you signed up for the course, shoot me an email too, or shoot me a message on Twitter, or if you have any questions, message me there too, and we'll go forward with it. Historically, do we have a 50-50 trade rate to win with a 1-to-4 risk ratio, or is it a brand new thing? Historically, do we have 50% race with a 1-to-4? Oh, sorry, repeat the question. Good question. So, would I say my win rate is 50-50? I would probably say it's a little bit higher than 50-50, which is actually really good. And I would say from a risk versus reward point of view, the win rate it's a pretty good bang for my buck. Let me see here. If I go to monitor account statement, and I'll show you some. I'll show you. So for like Red Hat for earnings, I did a one lot at $135, and I made $1,320. For World Wrestling Entertainment, I did like a $200 trade, made $1,000. eBay, I think it was like $380, made $1,000. Shake Shack, it was a $1.15 option that I sold for $5, so $960. Nike was $100 of risk to make. Actually, I used $100 of risk and made almost $1,000. But Nike, I think I had like a weekly option losing trade in at one point. That's why it says 841. So those were Play was a big one, $435, and I only had like $100 of risk. And then my biggest losers for earnings were what was an earnings trade? Abercrombie was weeklies. Starbucks, was that earnings? No. H&R Block, I lost $280. That might have been over 2 trades. Snapchat, I did that one long for earnings. That was a loser, $260. I think Canadian Solar was another one, $240 loser. But most of my losers for earnings are more within the, like FNSR, $135. Nutrisystems was earnings, $135. Sonic was earnings, $140. So most of my losers are in like the $140 to $150 range. And most of my winners, I would say probably were within the 400 to range with a couple over thousands. So it kind of gives you a good gauge. I usually risk about $140, $150 for earnings, and I try to make about $400 on earnings. So a little bit over a 3-to-1 risk versus reward ratio with obviously a couple bigger ones over there. I would say my earnings are a little bit higher than 50%. I tend to run pretty good. Now some names like Snapchat I probably should have never traded, but I was running good, so I was feeling a little cocky, I must admit. So yeah, I feel like I trade earnings. I feel like I get most of them right actually. which is really good. So not everyone will be right, but I'm pretty confident. And if they are wrong, usually it's something like the conference call goes wrong or something. But I figure my probability is pretty high, judging by the option flow and the insider activity. Cool. Yeah, shoot me an email too, and we'll get all that information too started. But we'll probably do the course. I want to say I'm going to look when Facebook and all those big names report. I think they do like the 27th or 6th. I want to say I'm going to try to do it probably next Tuesday or Wednesday, the course. And of course, that will be recorded, but the course we'll do live with all the questions. I'll probably do it then, because I think, like, when does Apple report and stuff? And I know I have to go on time, over on time here. Like, I want to see when Apple and Facebook report, because that would be July 25th. So that's Wednesday. Okay, so Facebook's Wednesday. Apple, I know usually when they, oh wow, Apple's July 31st. When's Google? Google's next week, July 23rd. What about like Snapchat? August, Twitter, July 27th. Yeah, so we'll probably do it next week. I think next week will be good. All right, everyone. I'm going to wrap it up there. Shoot me an email if you want the replay. Shoot me an email anytime, really. If you message me on Twitter, I'll usually get back to you quicker. And that is it. Thanks again.